So today I thought we'd do a little bit of an update on where we are in the stock market at the moment. And you might have felt this, the last couple of weeks in the stock market have been a little bit, we've been stuck, we've been not moving anywhere, the volatility has kind of gone in the stock market. So we're going to talk about what's going on and potentially when could we see a big move coming again from the stock market. And evidence of that is when you look here, the stock market in the last 2 weeks is basically up 0.15%. It's hardly moved, and you probably have felt that the stock market has hardly moved in these last few weeks. However, we have been on a very good run. If you look from October time, you'll see here we have been up 11%, and we've started to make up some of the awful 2022 that we've had and had a bit of a rally. And that's also translated into the small caps, especially the small caps, the ones that have been hurt the most. For example, HIMS is a small cap, and if you look at HIMS since them lows, you see here that the stock is up 115%, and it just shows you how beaten down a lot of these small caps are. And you have a little pop in the S&P 500 and how much that translates into a very good run. It's the other way as well, you know, when the S&P is absolutely crashing, how bad that translates into the small cap stocks. And the thing is, yesterday was really surprising. Yesterday was a day where it started off pretty flat, and as the day went on, we just went lower and lower and lower, and we actually ended up down 1.7% on the S&P 500. And this was a little bit of a surprise. I actually thought we were going to be heading for a pretty good day yesterday. If you looked at the Chinese stocks, like JD.com for example, if you looked overnight, a lot of the Chinese stocks performed very well. If you look at the close on Friday and then where JD.com actually was, it was up at 1.11.4% on the day on Monday. And that came off China, and China easing the CV restrictions that they had. The easing wasn't massive, but as you probably know, they've had a zero CV policy, where basically if they have 2 cases, they shut down. And obviously in China at the moment, there's been a lot of protest about that. And there was a little bit of easing. I looked at the changes and there wasn't much. It was basically very restrict still, but you were allowed to move around a little bit easier. So it wasn't a massive change, but it showed some progress. And obviously a lot of stocks reacted, Chinese stocks in particular, reacted really positive to that, because they've been massively beaten down because they've just been one after another, heavy restrictions after heavy restrictions. And it's affected Chinese stocks this year. It's affected even companies that don't rely on China. There's a lot of companies that do sell in China which have been affected, but even some stocks that don't really have direct sales, because supply chains come from China massively. It's a big, massive economy in the world, and they've been, being affected so much because of opening up, shutting down, supply chains being messed up. That's obviously as well affected companies' supply chains, and that's affected some companies that have no exposure to China, but their supply chain comes from China. So this is obviously a massive impact that's happened in 2022, as well as the inflation pressures that have been going on. So I thought with that little bit of positive direction into an easing, seeing how some of these Chinese stocks reacted overnight, I thought we were going to be heading for a pretty good day. But it didn't happen. The markets just seemed to go lower and lower. So why is this happening? Why have we kind of hit this last couple of weeks where the market's hit a bit of a stuck in the mud phase? Well, a lot of that comes on the Fed, inflation, and job data. You'll see here, like in October time, we had inflation data come out. Inflation data was the consensus of 8%. It actually came at 7.7%. The market was happy. That's why we saw such a good run in the market through October time, and everybody was happy, and that's why we've had a pop. So that was all good. Now the next phase that we enter is the new inflation data and the Fed meeting. So at the moment, everyone was kind of positive, going, okay, inflation is coming down. The Fed, even Jerome Powell even came out and said, if it keeps coming down, we are going to start looking at slowing these rates as soon as December. We'll see what happens. And everybody was happy. Then we kind of priced that all in, and then the little negative that we had recently that come out was the job data. The job data came out and it was strong. And what worried Wall Street then is that they have priced in inflation's coming down. The Fed are going to go from 75 basis points down to 50 basis points, a pivot that's finally happening where the Fed are going to cool down the interest rates. And then this little bit of data here shows that, okay, it's the economy out there is still pretty strong. So the problem with the Fed at the moment is they could reduce the rates because inflation is coming down. But if they wanted to, there isn't the pressure of, okay, inflation is coming down and also now the economy is massively crashing, we need to start slowing down these interest rates now. They don't have that little burden on the shoulder, because they can look and go, okay, we can actually extend it out a few more months, because at the moment the economy is still doing okay. It's not doing amazing, but it's still doing okay. And that was the Fed's big plan. The Fed's big plan was, we need to raise interest rates, we need to get inflation down, and we just need to be cautious that we don't crash the economy. And at the moment, it's not happening. You look at the job data is still strong. People are still holding down jobs. That's what the Fed wanted to do. They wanted to slow the economy down, but make sure people still had the jobs. And that's what's happening. People are still holding onto their jobs, and the economy is slowing down, and they've dealt with inflation. And the people on Wall Street are worrying now that they can afford a couple more months of carrying on high interest rates without crashing the economy. And that's what's starting to happen now. Wall Street is starting to price in a little bit of, but if they wanted to, they could still carry on with these interest rates. And that's what's worrying Wall Street and investors slightly, is the Fed doing that. So it's quite an interesting time frame when we get around to December. And especially the 1 week in particular, which is next week. And this is why everyone's kind of, it's kind of gone flat. Everyone now is bracing themselves for what's going to come next week. And probably until next week, we won't see too much rash buying or selling, or even probably with the uncertainty that's out there, you probably see, because of the uncertainty, maybe even a little bit of trimming on positions, and we probably actually see maybe a little bit of a slow decline. So next week, what is the key thing that will probably dictate the market through December? Well, first of all, we've got the inflation data coming out 13th. On the 13th, we've got the inflation data coming out. There's no consensus out yet, but obviously some data that came out and showed inflation was dropping obviously would get everyone a little bit excited that, okay, inflation's still coming down a good amount. If the inflation comes in a negative point of view, or it's a higher point of view, or it holds around 7.7, or it's higher than whatever the consensus is, that will get people worrying about the Fed. They'll go, okay, inflation had not as good month as what we're hoping for. The job data is strong. Are the Fed going to just sit back and hold off a little bit until next year before changing the rates, the interest rates at the moment? And that's what is the first thing that will probably move the market, or potentially spook the market. And then followed up by the actual Fed meeting, which comes very quick after the actual inflation data, which is on December the 14th and 15th. That'll be another key point, because that'll be the point where if the Fed don't slow down and go from 75 to 50 basis points, everyone will be like, oh, they're still not, pivoting here. This is, worrying. The market will probably have a pretty bad December. Whereas the opposite could happen, whereas if the inflation data comes in better than what is expected, and then also we look at the Fed, and the Fed come out and go, okay, inflation's better than what expected. We can now afford to bring the interest rates down from 75 to 50 basis points. We're actually probably going to see a pretty good December, in my opinion. So yeah, we basically have next week, 3 days in particular, where this is going to be key for the market, and will be very key for where we end this year. If we have a good finish, a bad finish, leading into 2023, the tone is that inflation has been beaten. The Fed are now, changing directions, or where we move into a 2023 where everyone goes, inflation hasn't been beaten, it's still existing, it's still around. The Fed are still nowhere near, to slowing things down. It's going to be massive, tone set for the back end of the year and moving into 2023. And that's what everyone's kind of sat back and waiting for now. So we're kind of in a bit of an awkward phase now for the next kind of few days, where we are going to be waiting for this, and a lot of Wall Street will be waiting for this, and it's probably going to be quite stagnant until we get this, data and information out. So yeah, thought I'd just share that with you, and why the market might seem a little bit sluggish at the moment to you, and probably will be sluggish for a little bit anyway. So yeah, hope you enjoyed the video anyway, guys, and I'll catch you in a bit.